What's going on, everybody? Tiger here. Hope you all had a wonderful Easter yesterday with your families. I stayed home. I was busy for about 3.5 hours cleaning house. It needed it. Normally I'd be dashing on the weekends, but it was raining all day and didn't feel like getting wet, so figured I'd take advantage of that, take care of some things around the house. So, um, yeah, it's Monday. Let's take a look at a watch list for the week. So just as a reminder for you all, and I'm going to open up my YouTube page just so I can remind everybody that I do have all my videos completed as far as the trading foundation. So if you just simply go to youtube.com/at Tiger Trading Project, you'll find my YouTube page. If you click on my playlist here, click down here on the Trading Foundation playlist. And there's my 3 videos. You can just sort them oldest to newest, which I think it's already sorted like that. Okay. So just keep in mind, these are the 3 videos that you must watch in order to understand the basics on how to trade something. So it's in order: fundamental analysis number 1, sentimental analysis number 2, and then finally technical analysis number 3. Watch those 3 if you haven't already. That's the foundation of how to trade something. Once you have done that, then we can start taking a look at weekly watch lists, daily watch lists, as far as figuring out if there's something good to trade. Now, keep in mind I'm a currency trader, so I'm watching primarily forex pairs, but I also keep an eye on the indices. I might trade an index here and there, depending on how the moves, how everything kind of plays out fundamentally and technically for those. I trade gold, I trade silver, I trade Bitcoin as well. It's kind of ironic because I used to be a Bitcoin basher back in the day, but because Bitcoin, there was a time where it was just way, way too volatile. And I always said, I'm not trading Bitcoin until it starts behaving like a regular fiat currency. And fast forward till probably I would say over the last year, and I've actually been starting to pay attention to it more because it is kind of balancing out. Bitcoin to me is kind of like the index of cryptocurrencies. If it rises, the other cryptos tend to follow it. If it drops, the other cryptos tend to follow it down as well. So it's finally starting to behave like a regular currency pair, like a regular currency. So I have started to do a little bit of swing trading on it, a few days to a week or so. All right. So anyway, having said that, check those out if you haven't already. Those videos aren't designed to answer every single question because again, those cover the basics of those different analysis groups. The goal of those videos is to create even more questions. Okay, that's what they're designed to do. So I would encourage you, if you haven't yet, watch those and write down your questions, type down your questions, send me an email, send me a direct comment on the videos. If you have any thoughts or questions about the nuances. Those are the basics. Now we got to learn the nuances of trading. All right, that's the hard part. It's a hard part, but it's made simple based off of some software I do have, and obviously 11 years of trading experience at this point. So yeah. Having said that, let's just jump right into my watch list, and we'll see what we got going on. So keep in mind, I use the Edgefinder. You can go to a1trading.com, just like it shows there in the top right. All right, a1trading.com. You can purchase this software. They do have a lot of promos here and there, different periods of the year. So just keep an eye out for that. I have sorted now. This is all of the currency, or this is all of the assets that it trades, or that it monitors. So quite a few. You got quite a few options here. Obviously, all of the currency pairs, minor currencies, the major currencies, metals. All right, so it tracks gold and silver. Crypto, right now it just tracks the Bitcoin, which is all I care about in the crypto world at this time. Commodities, U.S. oil, okay, and then bonds. So I don't trade the bonds. I don't trade I don't trade oil, so I don't usually have those show. I just trade those 4. So between the minor and the major, that's the currencies. Currencies, metals, indices, crypto. That's what I pay attention to. So now, with all the different indicators, as far as the sentimental, the technical, and then the fundamental, which is the economic data, it tracks everything and gives it a score, and then it gives a total score here with by the time you add up all these numbers to the right of it. If it's a 5 or higher, it's giving me a bullish score, meaning that's something worth trading. And then if it gives a -5 or lower, then that's a bearish signal. Okay. Do I just go out and short sell the Aussie dollar Swiss franc or the Canadian dollar Japanese dollar? Do I just go out and do that because it's giving me a bearish reading? US dollar Swiss franc, US dollar Japanese yen? No. That's only 2 of the 3 indices, or 2 of the 3 analysis groups. That's only the 4. That's only the fundamental and the sentimental analysis. I have to use the technical analysis on the charts to go find a place to perform that buy or sell action, right? So let's just take a look at the very first one, New Zealand dollar, Canada dollar. That's given me a very bullish bias. So that's a score of 9 or higher. And on the other side, on the sell side, a -9 or lower is a very bullish signal. So obviously I want to come into my mornings and find out if I have any very bullish or very bearish signals right off the bat. That's the first. Those are the hot potatoes. I want to go take a look, see if there's anything I can do there. So on this, I'm just going to get rid of the neutrals, because see, as you can see, neutral is a score of 4 to -4. I don't care about those right now. They're not in my wheelhouse. They're not something I want to trade today or right now. Now, this is a dynamic list. It could change. It changes several times a day, depending on the various economic reports coming out. If somebody's having an argument with each other, country to country or within. So for now, I'm just going to get rid of the neutrals, and I'm going to keep it simple with just my bullish and just my bearish lists. So right now, the number one asset to trade is the New Zealand dollar, Canada dollar. So all I do now is go to my chart, New Zealand dollar, Canada dollar. I need to find that currency pair. New Zealand dollar, Canada dollar, there it is. Boom. All right. So it's giving me a bullish signal. So as you can see, over the last, week and a half, we've went straight up. Okay. That's good because it shows it giving me a score of 2 for trend right there. Okay. The COT report, that's the institutional investors. It's given me a 0 score or a neutral score for that pair because their buying and selling of the New Zealand dollar and the Canada dollar individually in the futures market is relatively the same, whether that's up, whether that's down. It's given me a neutral score, so that's not adding to the bullish bias, but it cancels out. So retail traders, okay, the retail sentiment, that's giving me a +1 score, meaning if I go look at the retail sentiment, they are selling the New Zealand dollar, Canada dollar pair. Well, that's my guess. Let's go take a look. Market sentiment, retail sentiment, and I'm looking for New Zealand dollar, Canada dollar. Let's only show me the minor currency pairs at the moment. New Zealand dollar, Canada dollar. We're all the way at the bottom. Look at that. Look at that. The average retail trader, or what they call dumb money, is 93% short. Okay? They think it's going down. They're positioned as if it's going down. So what do we do with retail sentiment? We observe the masses and do the opposite. If they're selling, we're buying. So that's good for our bullish bias narrative. Go back to my top setups. We got seasonality. So seasonality, that's monthly and weekly trends for this pair. Traditionally, it looks like it normally goes down, right? Seasonality for the New Zealand dollar, Canada dollar. Let's take a look at that. I I need to select New Zealand dollar, Canada dollar from the list. New Zealand dollar, Canada dollar. Let's see here, monthly, weekly. Yeah, so as you can see there, it's below zero, meaning it's typically negative on this week over the last, I think it's 10 years. Yeah, 10-year average. So that's why it's given a -1 score, because historically, New Zealand dollar, Canada dollar goes down within this week. Now, it's just 1 week, so it's not a gigantic deal. It's just nice to have everything lined up to give an even stronger score. Monthly, where are we at here? Yeah, April, right? Minus 0.81%. So over the last 10 years, New Zealand Canada dollar on average has went down 0.81% during the month of April, which is what we're in right now. So that's why it's given us a -1. It's not contributing to our bullish narrative. Okay. Let's go take a look at the next one here. New Zealand dollar trend. The trend is up. All right. So here's the 1 day. This is the daily time frame over here on the right side. And like I said, as you can see from April 9th till current, it's just been going straight up. Okay. Up. If I look at that on a higher time frame, on a weekly time frame, it's a little noisier. It's a little more sideways, I guess you could say, right? I mean, it wasn't a downtrend, and then now it's started to kind of go sideways. So if you look at it on a monthly time frame, yeah, I mean, it's just, you know, since 2015, it's just very, very, very slowly went down. But this tracks the daily. Okay, so with this this most recent move, it's clearly been up. Like I said, it's a week and a half. Within the context of larger time frames, it's sideways or even slightly down. So we're just more so because I'm a short-term swing trader. I care about the recent move. Okay, and the recent move is a positive trend. Gross domestic product, manufacturing purchasing manager index, those recent reports for both of those currencies have pretty much canceled each other out. So that's why I'm getting a bullish, or that's why I'm getting a neutral score. Service purchasing managers index, however, is giving me a good bullish bias. So it's supporting the narrative to go out and buy this thing. Retail sales +2, same thing. Inflation, recent inflation reports, same thing. Inflation could be a combination of the consumer price index, the producer price index, personal consumption expenditures, those 3-4 major reports, and then the core as well. So that's good. That's supporting our bias narrative. Employment numbers, excuse me. Employment change and unemployment rate, those are canceling each other out. So we got a neutral rating. And then interest rates. So yeah, I mean, if I isolate the New Zealand dollar and the Canada dollar on the recent reports, let's do this. Let's do Canada dollar, New Zealand dollar. I only want to see reports for the month to see what we've got. Okay. So up here is our unemployment numbers, Canada. Okay. So a negative report release for the Canada dollar. So that supports our narrative. Here's a smaller report, Canada IV PMI, Purchasing Managers Index. That's a negative number because it's red. Remember, the forecasted number, for example, right here is 10.4. Okay, for the employment change. In other words, the economists projected 10,000 more job positions taken. Well, the reality is it was 32,000 less, or negative 2,000. So in other words, there was just less jobs taken. So clearly that's lower than 10,000. That means it's negative for the currency. It's also negative for Canada's stock market, right? So that's helping out our bias. against the Canada dollar. Okay. Canada dollar down here. More bad news for the Canada dollar. So last week we had the consumer price index reports come out, and every one of them were negative except for the median. So CPI month over month, trend, and common CPI year over year. Look at that, all red. You had the forecast over here. The real number that came out was less. Three of the four were less than the forecast. Obviously, that one was spot on, 2.9, 2.9. Come down here, we got the Bank of Canada. We have the overnight rate, so that's basically their interest rate. Okay, they projected a 2.75% rate, bank rate, and that they were spot on. So that doesn't really move markets much. But we got the consumer price index report for the New Zealand dollar, and that was a positive, a 0.9% against the forecast of 0.8%. So it's only 0.1% higher than the forecast, but that's good for the New Zealand dollar. So as you can see, and then we got some more reports coming out later this month. So as you can see, just for this month only, all those reports favor the New Zealand dollar, and they go against the Canada dollar. And then if we go to the previous month, we'll see some more of the reports that it tracks. And again, overall it averages out to where we want to buy the New Zealand dollar, sell the Canada dollar. So that's why it's given us such a strong rating. Okay, so now we just got to find a place on the chart to go place a potential buy order. So if I just take a look over here on the right side, now my left side, this is my 4-hour chart, so it's a smaller time frame. But the right side, this is where I want to look at my trend. Okay, if we can think back to the technical analysis video number 3, which you got to watch, I'm telling you. We look for our trend on the intermediate time frame, which for me, as a short-term swing trader, is the daily time frame. I use my weekly time frame to find the curve, to find where price is. Am I trying to buy something in a wholesale area, or am I trying to buy something in a retail area, or am I diddling in the middle, right? Remember I showed you the Hungarian flag, all right? So go check that video out and you'll see what I'm talking about. But yeah, on the daily, we've been trending upwards. Over here on the 4-hour time frame, this is where I want to find my demand zones, right? Because I'm wanting to buy in a demand zone. I want to buy where there's an imbalance in price, where price temporarily agreed. The buyers and sellers were in equilibrium, and then price left that zone and shot upwards because the buyers won. Okay, the bulls outweighed the bears. So what I've done is I've put on my Fibonacci line, as you can see here, from the swing low all the way to the swing high. So that's what that is there for. And then I would like to see a pullback of at least 38.2%. Why is that? Well, because people that bought down here, whether that's retail traders that do know what they're doing, okay, or the institutional investors, we clearly had a lot of buying action down here. So price is going in their favor, going in their favor, going in their favor. They have bounced into a daily supply zone. So I guarantee you there's a lot of people that are selling for profits in this area. So what I would like to see, personally, I'd like to see price actually go through that area to cancel out that supply zone. And then, like you see here, I've actually kind of drawn it out already. I would like to see price continue up, close up here, come back down and retrace, get more sellers in here, people taking profits, people taking the short side of that. They're short selling up in this area, hoping price goes down for profit. What I want to see is price come down and bounce off of this level and then go up. And if it comes down here, I might place a buy order. So that's the daily. Now let's look over here on the 4-hour side. So I do not have a 4-hour. I do have a 4-hour demand zone, but it's not a whole lot of trade. It's not a whole lot of volume. It's not a whole lot of trading action within that area. Okay, let me get rid of this indicator over here on the right real quick. So if you look straight down from that potential demand zone, all right, you see all the way at the bottom, tiny, oh, come on, tiny volume candles relative to some of the other ones around it. It's just not, to me, it's not that interesting of a place to buy. So if I go further down, I obviously see a demand zone candle way down here. It's got some decent volume underneath it, and then the leg out candle had a volume spike, so I do like to see that. So yeah, I mean, look, if price were to come all the way down to that area, I might consider a buy. If I see something like this, come down to here, and then potentially buy something like that. Okay, hit that zone, hit that demand zone. Excuse me. But within the 38%, the 50%, the 61.8% golden Fibonacci levels on the 4-hour chart, I'm not really seeing anything. This is a demand zone, but it's on a smaller time frame. So let's do this. Let's get rid of some of these things so I can show you. Yeah, 2-hour, 1 hour. I believe that's a 30-minute. Yeah, that's a 30-minute demand zone, where that green rectangle is. Okay. So there's my demand zone I'm looking at. Last red candle down. Okay, that red candle down before price went screaming upwards. So that's the origin of a strong rally. That's why I marked that candle. And if you look down, we've had some pretty good volume within that red candle, and then even the next candle, the leg out candle, had some really good volume relative to the recent candles. Okay, so I like it. But I don't like that I have to go all the way down to a 30-minute time frame to find that candle. I prefer to trade off of 4-hour demand zones or 4-hour supply zones. Ideally, my perfect setup is to find a daily demand zone, and then within that demand zone or supply zone, like right here, we see we're clearly in a supply zone. Okay, we're bouncing through it in it right now. Within the zones, the daily zones, I like to see a 4-hour supply or demand zone. Okay, that's my ideal setup. It's confluence of zones within the daily and the 4-hour. Just as an example, if I look at the 4-hour supply zone that it's currently bouncing around in, are there any 4-hour zones? I don't know. Let's take a look just for fun. Okay, 4-hour. No. All right, we don't have it. We got that last up candle before the down move, but the candles after just kind of slowly moved around. In other words, if that would have been a really good 4-hour demand supply zone, I would want that candle out, that leg out, to be closing somewhere down in this area. But instead, it just kind of dances around very, very slowly out of that zone. We wouldn't place a trade there anyway because it's given me a bullish bias. But if all the fundamentals and the sentiment were to flip-flop and it tell us that we now have a bearish signal, yeah, we could potentially look at placing a trade there, but I don't like the zone. I like the daily, kind of. Okay, I like how it sharply dropped, but even look at the volume coming out. Look straight all the way down at the bottom. These volume candles, they're tiny relative to the previous candles. So it didn't come out with gusto. We need gusto. Okay, gusto. So anyway, having said all that, I went ahead and put a alert right here on this one. Actually, again, I put an alert here because it did leave the zone pretty good on that specific 4-hour demand zone, but it didn't come down. It didn't retrace down to at least the 38.2 level. So, like I said, I like to see a little bit of a pullback, a healthy pullback. I want prices to come back to more of the wholesale the wholesale level. So, but I might still take a stab at that trade, just put on smaller risk. But even though I didn't get good volume, a good 4-hour candle coming out of that supply zone, it's still a daily supply zone that dropped like a rock. So I don't want to go against that. I don't want to fight the higher time frame traders, because they might take that thing all the way down here, right? So if I were to place a trade in this area, what I would like to see, like I mentioned earlier, I would like to see price go through that zone to negate it, close up here somewhere, and then come back down to my zone before I buy. So that's why I've got that alert set. Because think about it, if price were to come up to this point somewhere, then I'd be taking my Fibonacci level and moving it up, up to this area somewhere. And then hopefully I could get a move like this to where it now comes down to the 38.2 level. Because the Fibonacci level moves. If the higher point keeps going higher, I just keep adjusting it. So that would be a great trade setup, but it's not something that's necessarily going to happen today or tomorrow. Okay, it might take a few days worth of candles to get up to here and close and come back down. So this potential trade isn't the greatest right now, but in a week it could be. It just all depends on how price action goes for the New Zealand dollar and the Canada dollar over the next couple of days. Next week. So yeah, I've got an alert set. It'll let me know if price comes back down that area. I'll just look at future price action. Euro dollar is, as you can see, it's giving me a bullish rating of an 8. So let's go take a quick look at euro dollar. All right, here we go. Swing low to current swing high. I've got my Fibonacci tracked on there. I've got a daily demand zone candle, which I've got marked out in yellow. If I take all my drawings off, you see that my indicator does the work for me. Look, I know how to track all these demand zones and supply zones. I've been doing it for a decade, but it's nice to have an indicator that just maps it out automatically for me. I mean, it's the idea behind trading is to have as much stuff automated as possible just to save you time on your search. So that's why I love this MTF supply and demand order block filter up here. Turn it on, turn it off, and it just automatically maps out relevant supply and demand zones. Okay, I love it. I love it. It's just saving me time. So anyway, we've got that daily demand zone candle within this swing low and swing high. Okay, rally, base, rally, based right in this area, rally, base, rally. We had this leg, this big green candle, that was the leg in. And then we had 1, 2, 3, 4 candles for the demand zone. Okay, and if I wanted to include all that, then I would go, I'd make it look something like this. So that's the leg in. That's 1, 2, 3, 4. So if you remember back to the scoring system I showed, 1 to 3 is best, 4 to 6 is good, and then anything over 6 basing candles, that's a no-go. So this is giving me a score of a 1 out of the possible 2 for the amount of time price stayed at that zone. Okay, so not great, but good. But I'm just going to isolate just the daily candle there. So now let's find out if we got a 4-hour demand zone within that daily demand zone, and sure enough we do, and I've already marked it out. Okay. Oh, let's turn it back on. Okay, there's my 4-hour demand zone candle within the daily candle. And as you can see, whatever I do on one screen, it shows on the other screen. So I'm pointing out the 4-hour demand zone. Look over on my daily chart, you can see my little cursor bouncing around. So that 4-hour zone is within that daily zone. That's awesome. That's what I like to see. Confluence of zones. Okay, so I've marked all that out. I got and the same thing. If I put a drawing over here, it shows up over here as well, and vice versa. So 4-hour demand zone rectangle within my daily demand zone rectangle. We got the makings of a potential grade A setup. All right, so what do I need to see now? Well, let's take a look on the curves real quick. All right, let's go to my weekly time frame. Let's find supply and demand zones over here. And it looks like, okay, so here we go. So there's, on a weekly time frame, there's my weekly demand zone candle all the way down here. And I'm just going to color that thing orange for the moment, just to separate the colors. And then up here, we are bouncing into a weekly supply zone. See that candle right there? All right, price based, dropped down, came back up, got close to it, but did not touch it. So it's still a good supply zone. Fast forward to today, it's bounced through it. Let's go ahead and draw that in real quick. Let's zoom in so it's a little bit easier. All right, so there is my weekly supply zone. Again, if we look over here to the left, you can see it's clearly going through it as we speak. Now, on a weekly time frame, if I get rid of my drawings for a second, you can see we've clearly been up since mid to late January. It's just shot up like a rocket. All right. So where's my curve? Where's my curve? Remember, it's at the proximal lines of the zones. So if I just put this little line from here to here to here, remember we got our Hungarian flag example. Let's go over here to our 4-hour zone. Now keep in mind, I only want to buy as a newbie, as a beginner. You only want to buy. You want to stay out of the red zone. Don't diddle in the middle. You want to buy in the wholesale area if you're buying long to go up. You only want to short sell in the retail area if you think price is going down. Well, where's our 4-hour zone? Uh-oh, it's in the red area. It's in the red area. Don't diddle in the middle. Okay. Yeah, this is what they teach us not to do. Don't diddle in the middle. Now, me personally, I'm probably still gonna place that trade because I've seen how this stuff works for a decade now. Like, this is my 11th year. I would not recommend new people to do this, but I'm gonna do it probably. If price comes down, okay. Yeah, because it just looks so sweet. The reason why I would do it is because, again, all my fundamentals are looking pretty decent. Okay, we got 2 plus 2 plus 2, that's 6. We got all these zeros that cancel each other out. We got the interest rate that's given us a negative 1, so 6 minus 1 is 5. So even without the interest rate, we still have a bullish signal. And then it also helps that we got trend in our favor, and we got the retail traders trying to short sell this thing. Okay, we got the seasonality going against us, but 2 plus 1 plus 0 plus negative 1, well, that's still giving us a 2. Okay, so because I'm getting a good analysis on everything except for the curve, yeah, I'm still going to probably place that trade. If price comes down. Now, it may take a while. All right, let's get rid of that so I can clean up my chart a little bit. Get rid of that. Let's get rid of some of this other stuff too. Get rid of that. Okay. So yeah, I mean, look, it might take a while. It might take a while for price to even come down to that area. All right, we might be looking at a couple, 3 days. We might be looking at a week. Ideally, if it's going to do it, I want it to fall quick. I want it to fall within the next couple days. I want price to follow that line, hit my zone, within my zone, so that I can place a potential buy. That's what I'm looking at for the euro dollar. Now, the only thing I dislike slightly about the 4-hour zone is it's kind of skinny from top to bottom relative to the other candles around it. So what I would look to do if I were to place a buy order there, I would take my stop loss and go below. Oh, wait, let's do this. I want to go back to the daily over here, and then I'll show you what I'm about to say. So if I'm putting my stop loss in, now they traditionally teach to put the stop loss just below the zone of entry, right? Meaning, you know, if I make this a red line showing where my stop loss would be, they would say to put it slightly below the zone like that. Okay? Meaning price comes down, you place your order, and then you sell, you put in a stop loss to get out of the trade. This is your line in the sand if price goes against you, right? So if price just comes down and just goes straight through, if it hits that spot right there, you would sell in order to get out of the trade. But what I would do is take that stop loss and just go further down below the daily demand zone instead, like that. So it's giving it a little more wiggle room to play with. So now I don't care if price comes down and bounces around in this area before it goes up. That's ultimately what I would be looking to do there. Okay. Yeah, because I got a lot of profit potential here. I mean, you know, ultimately on its way down, it's probably going to form a supply zone somewhere in this area. But as long as I get a 3-to-1 reward to risk potential, if I take my distal line and I go down to the stop loss, it's 85 pips. Ultimately, I would want to see 85 times 3 up. A1624, 240, that'd be 250 pips. So 250 pips, looks like we're sitting around this level here, the 1.1235 area. If price comes down and touches and goes up to here, that's a 3-to-1. That's a good place to take profits. I wouldn't take profits there. What I would do is just start trailing my stop loss, bringing it up. If I get to a 1-to-1 risk reward or 1 to 1.5 risk to reward, then I'll probably move my stop loss where it's at to just above the entry point like that. Now, what that's doing is giving me a free trade. At worst, price comes against me and goes back down and touches it. Well, I've stopped out for a small win. I've stopped out for a cup of coffee, right? I want my trades to buy me a cup of coffee at worst case scenario. So yeah, now the euro dollar, it's a pretty liquid pair, so I could see that drop in the next couple of days. We'll take a look. We'll find out. I've got an alert set. So if and when price comes down, at that point, I'm going to monitor and see what price is doing if it starts getting just before, and obviously when it starts entering that zone. Do I get a engulfing candle? Do I get a candle that pierces the zone but comes back up and closes high, leaving a tail, leaving a wick? I like wicks in zones because that means there was strong rejection. Strong rejection means limit orders are triggered for buy orders. People placing market orders. Obviously, the big banks. I can see this stuff based on a 1-minute time frame if I'm looking at the volume bars in those 1-minute time frames. Right? Now, I won't place a trade from the 1 hour, but it will at least show me down here where's the volume at. Now you can see down here, volume starting to come in this area, just for example, where it's sitting currently. Okay. Yeah, you could get a big ton of retail traders, but normally it's the institutions that are doing that. So if I start seeing a bunch of high volume candles, if price comes down to my zone, I want to look and see how maybe that 15-minute candle closes or that 30-minute candle closes. Is it a bullish? Is it a strong bullish close? Is it engulfing previous candles? Is it an expanded range candle covering 3 previous candles in a row? Hey, look, those are all signs that it's a valid zone, and I'm going to place that order. So that's enough for the Euro US dollar. Let's take a quick look. Just to keep this video halfway short, I'll just skip the rest of the currency pairs and I'll just go straight to gold. All right, gold, bullish rating of an 8. It's been going up like crazy over the last couple months. Let's go take a look at it on a chart. Look at this, just a straight shot up for a while. Yeah, let me zoom out. Let me get rid of my drawings. Show you guys daily time frame over here on the right. Look at that. I mean, it's just been going haywire. Let's get rid of all my drawings for a second. Look at that. Let's see here. Yeah, that's about when it started to turn. October-ish of 2023. Ever since that point in time, look at that. Just an absolutely straight shot upwards. Bzz, 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 bzz. And especially over the last few weeks, it's just been going even more parabolic. So gold is the inverse of the US dollar, inverse of the stock market as well, for the most part, I think. It's just been going just haywire, crazy upwards. People that bought into gold way back here, they're happy. As long as they're position traders and holding this thing for a long time, they're making a lot of money. All right, so clearly we got daily up move for quite a while. Do I have any demand zones? I do. Hold on a second. Yeah. So yeah, currently I don't have any really good demand zones until way back here, January 29th. So because it's such a parabolic move, I'm going to pay a little more attention to it on the 4-hour time frame. Now on the 4-hour time frame, we have, I got to adjust my Fibonacci, of course, because it keeps moving upwards. We got a demand zone here that got hit already. So, you know, some people, well, clearly people bought in that area because price just kept going from there. So even though I didn't like that 4-hour demand zone, it still worked out. These things are powerful. See, that's a red candle, even though it looks green. Let's do this. So see, red candle, price left. So we got our leg down candle. What we got is a drop base rally. Leg down or leg in, okay? 1, 2 basing candles. So it did not spend much time there before shooting back out. Now, price, I didn't buy this zone because price did not break that little top right there. If I were to have bought that, I would have wanted to see price come up here and close before coming back down to the zone. So that's why I personally didn't buy it. Now, having said that, it still worked. That was a very weak exit, but gold is so parabolic lately, it didn't care. It just didn't care. People still came down, people still bought in that area. And as you can see, price is just going parabolic ever since. Crazy. Crazy what gold does, man. Gold's one of the most popular instruments to trade. A lot of people make a lot of money, but so many people lose a lot of money. It's just absolutely obscene. That's why you got to be careful with this stuff, man. But yeah, I do have a green rectangle down here. It's not a 4-hour zone. I think I got that down on a 2-hour zone. Yeah. So, you know, coming back down to the 61.8 Fibonacci level, retracement level, I went ahead and put an alert there. If I zoom in on a 2-hour time frame, I believe that's 2-hour. Yeah. So that's what I'm looking at. Okay. Price based and then shot up like crazy. Shot up with gusto because we got high volume bars. And just kept going. That's a 2-hour time frame. Or no, is that a 2-hour? No, that's a 1-hour. I'm sorry, I need to go back to my 2-hour candle. I think that's on a 2-hour. I thought that looked, yeah, there we go. I got it right. 2-hour time frame. All right. Yellow volume candles, meaning there was a lot of trading activity in that short period of time before price just going crazy. So I've got an alert set there because if price comes back, I want to see a retracement. I want to see a short-term downtrend on the smaller time frames because that'll suck in the shorter-term short sellers. All right, and they're going to put their they're going to start selling, sell. Every time they put in a sell order, what are they going to put on above it? A buy order, which is their stop loss. The opposite of a sell is a buy. So what ideally I want to see is all the short sellers come in and put their stop loss liquidity above their sells, so that price triggers this area because there's unfilled demand. We know that because price left it in a hurry. And then once price touches, I want to see the big banks step in, buy. And then as price rises, I want to see it do a short squeeze of all the short sellers that tried selling this thing on the way down. Trigger a short squeeze and we see price just fly up. That's the ultimate goal here. That's the thinking and the psychology behind these trades. Is what is the opposite people doing? Okay, they're providing liquidity. They're providing more orders, more fuel to the fire of potential short squeeze. So and we know that that's happened nonstop because again, over the last however long, people were trying to sell this top. No, price comes against them. They were selling up here, right? They were selling here. They got a little movement, but price kept going and destroyed all their stop losses. Same thing here. Short sellers come in here. They put their stop losses above, and then the big banks and everybody else say, nah, B, we need that liquidity. People short selling up here. They were happy for a few days until price turned around and took out their stop losses, and so on and so forth. This is the psychology. This is the nuances that you got to learn in order to figure this stuff out, okay? Nothing really is going to teach you any quicker than just studying the hell out of this stuff. Trial and error. All right, so that's gold. And the last one I want to take a look at is Bitcoin. I don't want to make this video too awful long. Bitcoin. Yeah, so I'm getting a 7. 7's higher than 5, so I got a bullish score. Take a quick look. All right, we got a daily candle trying to form. As you can see, the algorithm's already plugged it in as a demand zone. I personally don't like it because I want to see price go above this area first and close. So I want to see price, well, actually, I've already drawn it in. All right. I want to see price come above this level and close before coming back down to my zone. If I look at it on a 4-hour time frame, of course, I need to adjust my Fibonacci level, it looks like. Above, up to the high there, current high. Yeah, so I want to see price go up and break those levels, close, and then I want to see a pullback. I want to see these buyers. I want to see these buyers start taking their profits to drop price. This will suck in the shorts. We come down to the institutional demand, and we smoke them fools on the way up. We short squeeze them. All right, it's as simple as that. Now, Bitcoin isn't looking as good as gold. If we look at our Bitcoin to gold ratio, okay, this is the value of Bitcoin relative to the value of gold, and you can see it's going straight down. This is why Bitcoin has been crazy all year. There haven't been, we got to 100,000 at one point, and then we came below it, and we haven't even touched it since. This is partly why, because the ratio of Bitcoin interest to gold is just clearly going down. So that means gold is the more favorable thing to trade between the two. Oh, I didn't know I could do that. This is why gold is going up so fast. There's more interest in gold than there are things like Bitcoin. All right. If you're a Bitcoin trader, you want to see this chart inverse. You want to see this chart going up and up and up and up and up. But it's going down and down and down and down. That means gold, the value of gold is far outweighing the value of Bitcoin. So that's why, and that's why we care about, that's why I personally, I should say, care about trading gold more so than Bitcoin. But having said that, yeah, and as you can see over here on the daily chart for Bitcoin, let's get rid of all my drawings. There's a daily demand zone trying to form. There's a supply zone way up here. I mean, look, we had a really good spike back in November when price did go up and actually break 100,000, which is right about there. Went up, came below. Went back up, came below, and it's been below ever since. Okay. For me to become really interested in Bitcoin, I would like to see it. Yeah, I mean, I obviously back above 100,000, but yeah, come back above, break those highs over here on the left, and then come back and find a daily or a 4-hour demand zone somewhere in this area for it to go back up. But it's not really too much on my radar right now. Now, I placed because I am a short-term trader, I have placed an alert there within that 4-hour demand zone just to see what price does, if it reacts decent at all. Okay. So that's that. The main thing I'm paying attention to right now is the New Zealand dollar, Canada dollar. But I do have alerts set on most all these just to see how price reacts around relevant areas, 4-hour demand zones, maybe 2-hour, obviously some 30-minute demand zones on a few of those instruments. But yeah, this is a dynamic list. Like I said, I update this thing many times a day just to see if anything new is on the list, see if anything's fallen off the list. But by putting in alerts on all these, I don't have to sit here and stare at charts all day. I can go out and be productive. Right? And we just went on the positive side. But yeah, we could go look at every single one of these, knowing that we've got a good setup, that we've got a good fundamental and sentimental setup. All we need now is the technicals, like I've done for 4 examples there. So, yeah, this was my first video, my first watch list video. Hopefully it doesn't suck too bad. I'll get better. I'll figure out better ways of explaining things, showing points on the charts, et cetera, et cetera. I might start cleaning up my charts a little bit. It all makes sense to me, but it might be a little overwhelming to a lot of you, seeing all the different colors and lines and everything. That's probably what I'll start doing is start off on a naked chart, keep it naked. But yeah, I got a lot of different things in there, which I understand, but I'll probably simplify it a little more from now on. So yeah, that's my watch list for now. Hope y'all got something out of that. If you have any questions, let me know. Like, share, subscribe, give me a comment, email, whatever. And we'll see you on the next video. Thanks.